Okay, hello everyone, and welcome to this price ladder analysis stream. This is my first stream back after I've been away for the Easter break, so I was away for a little over a week. So I've been a little bit out of touch with the markets, but we're going to go through a little bit of a setup that we see. Obviously, it's month end in a couple of days, so I thought, seeing as we have month ends in a couple of days, I'd go through a little bit of a trick that we can potentially look for in the S&P month end. Not necessarily what to look for, but how to actually trade it. So what we're looking at today specifically is the E-mini S&P 500. The date would be last month's month end, which was, I think, the 29th of February 2016. If you guys just take a look back there, you can see what actually happened on that day. And specifically, we want to take a look at how to potentially trade it and our clip management. So what do we traditionally look for, obviously, on the S&P month end? What to look for? So we look for, effectively, the market tends to sell off into the month end. At least that's what we look for. If it's rallying, obviously you'd have to try and manage yourself, manage your risk in terms of seeing the price action and how it's changed. But more often than not, we look for the bids and offers to kind of stack up, get a little bit more thicker, and we look for sell side action into the S&P 500 close. So usually in the last 5 minutes. Some people look for the sell an hour or so before, but really the real price actions last 5 minutes, and I would even say maybe the last 2 or even the last 1 minute is where you could see the actual price action. So what you typically see is the market kind of consolidates and starts to sell off, and we get a bit of a rapid move down, and then quite a steep move. Let's just undo that last. Then we get quite a steep move back up. And then we kind of consolidate and move. So this move down is really what we want to focus on today. This move right in here is what we want to focus on. Essentially what we look for sells in this last 5 minute to 2 minute period. And then potentially, if you're quick enough and you can find a way to do so, we look to then buy it up in here. This is a very, very quick, and you have to be very, very quick to trade this sort of setup and understand your risk in this kind of setup. But there's 3 sort of ways you can actually trade this. Now, assuming that you are short in here, let's just say we assume that we managed to get short in this area in here, and we're in it for this little blip to the downside. We're obviously making quite a few assumptions here, but let's just say we are short. So if we are short, there's 3 ways to cut and reverse. So we're looking potentially to cut and reverse our position. Now, if you're not short, you could just potentially be looking to get long on the blip. That's a whole setup in itself. So there's 2 little setups in here that we're talking about, but we're specifically talking about right now the cut and reverse pattern. Now, there's 3 ways you can actually do that. Now, one, you can merely, as you're short, just stack your bids. You could just stack bids, and you usually would look for, I'd say, to be prudent, you want to look for, in this area in here, you want to look for about 1 to 3 handles. So about 1 to 3 handles of a move or a blip down. I mean, occasionally, if it's a little bit thinner, you might get 5 handle blips. They're pretty big, but it's usually about between 1 and 3 handles, I'd say. So you could just stack your bids here and look for the market to hit you, and then you could cut and reverse on that. A second way to do this is obviously just click very fast, which I wouldn't really suggest. Now, if you pick this one, that's fine. You could stack your bids and trade it that way. But if you're looking to click on the actual close, so at 9 o'clock close GMT time, we're talking London time right now, when the market actually closes and you get that final flurry or blip down, you could choose to click very fast, which I wouldn't suggest because I think you're wasting time in between each and every clip. Or you could do what I would say, or just kind of coin, a temporary clip trick. So all you have to do is just kind of play with your default and your temporary clip. Now let's see what exactly I mean by that. And we'll play the replay now so you guys can see exactly what I'm talking about. So we'll start this with about 2.5 to 3 minutes to go. And we'll see, well, we're just watching the ladder over here on the right and see how that pans out and see how what we can potentially do on that last minute of trade. So we'll just let this replay load up for you guys first. It might take a few seconds. It usually has to load up quite a bit of data, and especially into the close. There's a lot of data points it needs to load up. So just give it a good 5 to 10 seconds to load up, and hopefully we can get on to showing you guys what I'm talking about. There we go. As you can see, the market is trading 1932 3/4 right over here. Now, for argument's sake, and I'm not trying to be cute or anything, for argument's sake, we're just going to say I've traded this phenomenally. I'm already short 30 lots, and the market's now selling off into the close. Now, obviously, I already know what's happened in the market, but I'm just trying to show you how to actually execute when we get into that close point. So now we have about 2 minutes left. We'll go through the price action as we move down into it, just for argument's sake. I remember from last month, this actual sell-off, the bids and offers didn't thicken up a lot. And usually what you find into the close, you see the bids and the offers stack up quite a bit, and you see 2, 3, 4,000 lots is quite a bit of size. And with only a minute and a half to go now, with 200 to 300 lots on the bids and offers, it's quite a thin one. So you have to manage your risk a little bit more, because if people are coming to market and having to trade 2,000 to 3,000 lots at market, you have to understand that it can do a handle or two very, very quickly in a quick space of time. So you've got to be very nimble, and you've got to be very quick to react. So now we've got about a minute left. The market's kind of flipping around between these prices, doing about a handle either way. Not seeing any sort of real price action just yet, but if you do notice, the bigger clips that we're seeing are to the downside. 200 to 300 lots at market, all red. So they're aggressive sellers coming to market. The bigger clips are at market, and they're selling at market. So this is the main observation here. We've got about 30 seconds left. As you can see, as we go bid, we're only doing 1, 15, 20 lots, and then when we get back on the offer, we're selling 200 lots at market. There we go, just had 1,200 lots just absorbed. Now what we're going to do is actually change our temporary clip to 60. So when we actually get the blip, we've got 10 seconds left. We're going to try and hit it. So we've got about 8 seconds left here. We're going to hover over the bids. We don't know where it's going to stop. We've got 3 seconds left. 2, 1, blip. On the blip, on the precise close is when we get the move. That last little flurry to the downside is when we get that move to the upside. Now what you see I've done there, I've changed my temporary clip to 60, which allowed me, when I clicked at market, to cut and reverse back into a position of 30 lots into that blip. Now, obviously, I wasn't lucky enough to get the low, but in any case, I managed on that flurry down to capitalize on that blip to the downside, and at the same time cut and reverse for the move back up. Now it's obviously your decision where you want to scale out. You can scale out on the way up, as you can see right now. Whether you want to hold it in for a bit of a rally up in, I wouldn't suggest it. In my opinion, it's always better just take it out right away. If you get a handle or two on side, that's what you should be doing, not trying to run it for too long. It's really just playing for that flurry. The flurry just means that there's a bit of an inefficiency in the market, and that blip gets brought back up to the price where it stood. Now you can see now the reason why I wouldn't suggest, especially for those of you guys that are novice traders, I wouldn't suggest the best course of action is to take this middle one right here. So if you were looking to take this trade, you could stack your bids, which, in that case scenario, all you really would be doing is just placing effectively. The market was trading around 19, if I'm not mistaken, 1928.50s, I think, before it blipped. As far as my eye could see, you guys can rewind it and check just before it did blip. It blipped down. Now from this area, you could have stacked your bids, let's say, a handle away So you could have had one bid here, maybe another bid, another 1.5 handles away, another 10 here, and then maybe just through there, 2 handles away. It's obviously, it depends on how you want it. Sorry, 2 handles away would be here. That would be another 2.5 handles. But essentially, you could have stacked your bids here. So 10, 10, 10, 10, and then looked for the market to fill you, and then you cut in reverse. Now, if you want to be a little bit more precise and know exactly what you're cutting reversing into, I would suggest the best course of action would be to pick this one, and not to play too much with clicking too fast, because it's not very accurate and you're wasting time in between every clip. So these are the little tricks sometimes you got to understand with using a price ladder. If you have this setting on your price ladder, obviously the Futex Live price ladder has this for that very reason. You can have a temporary clip which helps you do that. But in any case, hopefully you guys use that to your advantage, and you kind of think of new ideas of how to use that temporary clip in the future. But thanks again very much for listening in for this short and sweet little clip, and hopefully we'll have more of these to come. Thanks, and good luck for the rest of the week, guys. Bye-bye.